It's about that time of day again. My name is Joseph. It's already Thursday evening, April the 5th. Welcome back to your nightly newsletter. My plan this evening is to identify the most reliable trading opportunities setting up for Friday's trading session. And I'm covering crude oil, S&P, Nasdaq, gold, and of course the euro. Starting off this evening, crude oil is bullish with a big triangle pattern moving sideways across the highs. That tells me to fade the breakouts for the most reliable buying opportunities down near the lows tomorrow morning. The S&P is also bullish, but the buyers have now been rejected twice at today's highs. So my plan for tomorrow is to not look to buy at the high, but look to buy down at the low. And my plan of attack is using seller failures on the S&P tomorrow morning. Nasdaq is bullish, but the overall lower highs tell me to wait for a deeper pullback before looking for more reliable buying opportunities down near the lows tomorrow morning. Gold is bearish with a big spike in range pattern trading sideways at the lows. That tells me this balanced market will likely give me the best selling opportunities up above the highs of that range tomorrow morning. And last but not least tonight, on the euro. Euro is bearish with a big channel moving lower. And price sitting right on the measured move support level tells me to wait for selling opportunities, but after a two-legged pullback up to those highs tomorrow morning. Boy, guys, we're gearing up for a big non-farm payroll Friday tomorrow morning, which means absolutely anything is possible. And as always, I've got a rock-solid trading plan for the most reliable trading opportunities, no matter what happens as we wrap up this first full week of the month of April. Before we jump into charts tonight, I do want to remind you, if you're watching on YouTube, you can find a detailed description of this entire strategy written out on my blog here at sidewaysmarkets.com. I'll leave the link in the description of that YouTube video. Also, if you have any questions about anything covered in this video, please remember to post those questions in the comments section below the video. And if you like what you see, please help support this channel by subscribing and make sure you hit the bell icon right below the video so you get notified every time I post another video. And if you really want to stay in tune with everything that I do here at School of Trade, you'll never miss a beat by making sure to join our mailing list. Head over to sidewaysmarkets.com. That's where all the action happens every day on our trading blog, and make sure you join our mailing list in the upper left-hand corner. While you're here, don't forget, I post exclusive content, charts, links, and updates throughout the week on my many different social media channels. If you're on social, follow me on social, lower left-hand corner. And how easy is this? All the charts that I cover in tonight's video, you can grab those charts and have them ready on your computer for tomorrow's session. That's right, even if you're not going to be with me tomorrow in the trade room, you can always benefit from those charts by following that link right below the video on the blog here at Sideways Markets. And then speaking of the trade room tomorrow, upper right-hand corner, grab that free pass. If you're not a member here at School of Trade, I'd love to share more about the entire trading strategy right on our trade room with that free pass. So grab that free pass in the upper right-hand corner and come out and join me right for a trading session tomorrow. And don't forget, if you have any questions, you can always hit me up on live support. Any questions? I've always got live support standing by. I'm standing by to answer all your questions there. And don't forget, you can always post those questions in the comments section below the YouTube video. All right, tomorrow is Non-Farm Friday. Let's get at it, guys. We're going to get ready here for tomorrow. Really, anything goes here tomorrow. The most important thing you need to be aware of is that tomorrow is the first Friday of a new month. And of course, the first Friday of the month is the non-farm payroll, the employment situation, the employment number tomorrow at 8:30. Now, the bottom line is you've got to be really careful trading overnight. A lot of times leading into these big non-farm Friday sessions, the overnight session can be very quiet and low volume just because the bigger lot traders in the market, right, who don't just get in and get out easily, if you were managing a big position, you'd have a hard time getting out of that position just before that news comes out. So a lot of big lot traders are on the sidelines here kind of waiting for that volatility to come and go tomorrow morning. And that oftentimes has a self-fulfilling prophecy, and things are oftentimes slow and quite sluggish. Now, I have to admit, over the last few months, we have seen pretty active overnight sessions in London. So if we are moving in the overnight session, feel free to trade it. But if it's not moving very quickly, you know what folks are waiting for, and I would sit on the sidelines until we have that news come out at 8:30. Now, speaking of that news coming out at 8:30 Eastern Time, in my experience, we usually get one of two scenarios. Either the market moves very fast or the market moves very slow. These are usually the two scenarios we see. They're usually very much polar opposites, and ultimately the reason why a market would move very fast after this news is because on Wednesday morning, we heard from the ADP employment report. And as I mentioned in last night's newsletter, that was a pretty strong number. And of course, people are going to use that number, right, as their kind of guidelines for tomorrow morning's report. So what I want you to think about now is because a lot of analysts, and analysts, of course, give their analysis to traders, and traders execute the plan at these big trading firms, right? Now that most of these markets have already priced in what people are expecting for tomorrow's news report. Does that make sense, right? So we saw a good heads up, a good leading number on Wednesday. Right? The analysts look at it, they pass on the recommendations to their traders, right? These big trading firms, right? They then begin to place trades based on what they think is going to happen on Friday morning. So by now, the markets have most likely already priced in what is expected to be happening on Friday, which means we are where we should be. Now, markets move very quickly if the news number tomorrow comes out outside of these expectations. So everyone's expecting to see a specific number tomorrow or a specific range of numbers. If we come out either above or below that range, right, and sometimes the numbers are way off, and in those situations, the market moves real fast because traders will scramble to manipulate their portfolio, manipulate their positions for plan B or plan C. So markets have already priced in, right, this news number. If the news number tomorrow morning comes out way outside of expectations, expect to see a very, very volatile, illiquid, fast-paced, and really dangerous environment. Now, why would this market move too slowly? Well, remember, we've got that heads up on Wednesday morning. The markets have already priced in what everyone thinks the number is going to be tomorrow morning. If we get that number tomorrow morning, well, the markets are already priced in. It will usually sit. And in my experience, it can sit for 5, 10, 15, 20 minutes before traders really start to see some movement. So as you can see, it all comes down to whether or not we come out tomorrow morning at 8:30 within expectations or outside of expectations. If the market just hits it on the bullseye tomorrow, if the news hits it on the bullseye tomorrow, right? In other words, if we see similar tomorrow morning to what we saw on Wednesday morning, we'll likely get a relatively slow, sluggish reaction. And oftentimes the markets are range bound, right, which is fine by me, but a very specific type of personality that we see. Also, don't forget, right, be careful. If that number comes out tomorrow morning outside of expectations, the market moves very quickly, and you've got to give it some time. You know, the most important kind of moral of the story is no matter whether we are within expectations or outside of expectations, whether we see it too fast or too slow, we've got to stay patient around this news tomorrow morning. So that's the plan for tomorrow. And it's also really important that you understand that tonight I'm going to do the absolute best I can to give you all the technical information we need to trade tomorrow's session. But we got to remember, tomorrow's a big news number, right? We could see this thing completely take off to the upside or reverse to the downside. It's highly, highly unpredictable. And that's why big lot traders and experienced traders oftentimes, right, are very, very cautious leading into the news. And keep in mind, right, if you talk to 100 professional traders, probably 70 of them, 75 of them will say they don't even try to touch the time around that non-farm number. Usually the best day of trading is the Monday after that non-farm Friday. Right? So don't forget tomorrow, don't go forcing anything. If it's going too fast, if it's moving too slow, if it's really sloppy and choppy, right? Protect that capital because you'll want to save that capital for Monday's session when all the big boys and girls come back to work, knowing that they're going to have a nice, clear session to work with on Monday. So don't force it tomorrow. And then one more thing here. Tomorrow is a Friday. And anytime we have a Friday, we always talk about early in, early out. And then remember those prior week open, high, low, and close levels. There are two big and common factors on a Friday morning. Tomorrow just happens to be a non-farm Friday. The first one is early in, early out. Now remember, as we get later in the day, later in the week, later in the month, right? Tomorrow, of course, will be late in the day and later in the week. As we get later in the day, later in the week, later in the month, traders start taking bigger risks, right? Either they're way up on the day or they're way down on the day, either playing with house money or trying to dig themselves out of hole. At the end of the week, and I remember this when I was a new trader, don't you? I recall distinctly sitting at my desk on a Friday afternoon trying to make back money I had lost this week, trading foolishly, buying high, selling low, and not following rules. You know, trading on Friday afternoon reminds me of my grandmother telling me when I was a kid, Joey, nothing good happens after 10 o'clock at night, so get home early, right? What she was saying was get off the roads, right? Because it's dangerous as the evening gets later. You've probably heard some variation of that, right, from your parents or your grandparents or, right, thoughtful individuals around you, right? And the moral of the story is that as it gets later, right, the only people who are driving are tired or intoxicated or et cetera, not everybody, obviously, but that's a generalization. The same thing goes for late in the day on Friday. Late in the day on Friday, professionals aren't trading. They've already made their money this week. So you're left trading with rookies, retail traders, and at the end of the week, they have anything, right? But right, all they're trying to do is make up for lost time, right? And that leads to destructive trading. And it's easy for those people to drag you down with them, right? Because patterns aren't going to work as well. So early in, early out, my recommendation, my plan is I don't trade after 11 o'clock on Fridays. It's going to be a really, really good reason. I've been around this business long enough to know there are so many great times during the week to make money, right? Get to it early on Fridays. I hope you'll take my advice on that. And then the second thing on a Friday is as we go into the end of the week, we start watching prior week open, high, low, and close levels. The most important are the high, the low, and the close. Opening prices are, they're important, but they're not as important as high and low and close prices, right? Closing prices are always the most important. So if you see any prior week closes out there, those will always be used as price magnets. We're going to see a couple of them here tonight, right? A couple of them on the Eminis, a really good example of how we can use the prior week high, prior week low, and prior week closing prices, right, for some magnets tomorrow. So early in, early out on a Friday morning, and watch that last week, not this week, but last week's open, high, low, close levels, because they're going to start acting as price magnets as we go into the end of this week, right? End of the week, last week's levels. End of the month, last month's levels, so on and so forth. All right, so we've covered a lot today. Early in, early out. Prior week open, high, low, close levels. Remember to give it time around that news report tomorrow. And then the last thing on the schedule tomorrow is we got Jerome Powell, right, our Fed chairman. So he was speaking at 1:30. He'll be in Chicago. This is not your big kind of testimony, in Washington, D.C. I would expect by this time the markets will be in a nice little lull, right, after we come back from lunch, usually low volume. So be careful out there. Be very careful trading any reaction to that. I doubt he's going to say anything that really matters, but with low volume, anything can happen. If he says something off the cuff, right, during that speech at 1:30 on Friday, the markets could easily move aggressively because there won't be that many traders on each side of price, and market may get pretty nasty. So just be careful, right, tomorrow afternoon after 11 o'clock, because again, Monday is right around the corner, and you want to save all that ammunition, save all that capital, right, for the best time of the week to be trading. Alrighty, that takes care of the schedule for tomorrow. I know that was kind of a long-winded introduction there, but as always, I want to make sure you guys are prepared for everything that is on the schedule. All right, now let's jump into some charts here. I've got crude oil, S&P, Nasdaq, gold, and euro on the schedule here for this evening. Crude is bullish with a triangle trading range this evening, telling me to keep focused on buying opportunities, but look for them down near the lows, because we've seen the buyers get rejected each time they try to go higher. You can also see on the chart that I've added some hidden channels using trend lines and combining that with the measured move. The measured moves should act as great support and resistance on the chart. Now, before I jump into this chart, we get a bunch of these kind of similar scenarios here today, and that is, at least on crude oil and the E-minis, a strong move up, a pullback, and a retest of that high. And then what happens is when we get back to retest that high, rather than the buyers taking off to a new high, we see the buyers getting rejected. That creates a double top. Once I see that double top, then I look left, I find that prior swing, and that becomes the bottom of the trading range. Now, there's some variations of this. You'll notice on oil, right, and on the S&P and the Nasdaq, we may have a channel going lower, right? We may have some triangles here on crude, but it's all the same stuff, right? It's all the same stuff. It's a range. And here we have a bull market into a trading range. Now, whenever I see a bull market into a trading range, I know I'm looking for two areas. Looking for buying opportunities, obviously, down below those lows, and I'm looking for failures down below those lows, right? And then over the highs, I'm looking for what I call the fake out, breakout, pullback. Alrighty? 1, 2, 3. I'll give you a chance to screenshot this if you want it. It's pretty simple, right? So bull market, double tops to the high. That's the key, right? Double top. And it might be a little bit, maybe a little bit more than a double top. You'll see in a moment, right? They're not exact double tops. Exact double tops are relatively rare. But, what we're not seeing is we're not seeing the buyers explode higher, right, through that high, right? So that tells you this market is balanced. Bull biased, right, but balanced. So I want to see failures of the lows, right, and that fake out, breakout, pullback to the high. Here's how it works. Get those off of there. Now, failures. I want to see the market get below this range. Now, when the market moves lower like this, the sellers are going to think this market is reversing. Remember, we talked about the scalper's curse, right, in last night's newsletter, and how a lot of rookies, I did it when I was a new trader, they only focus on such fast time frames that they can't see the big picture. They can't see the forest. All they see is the single tree. So when the market moves lower like this, right, when it moves lower like this, and it usually moves lower pretty convincingly, the moving average comes down. The sellers, of course, thinking the market is bearish, they try to sell the market lower. And they may be successful. I can't predict the future, but all I know is that long-term probabilities, which is all we do in trading, tells me these sellers should fail. Now, I can anticipate where they're going to get in trouble. Once the market makes a new swing high, all the sellers in the market are probably going to start panicking and getting out for a loss. That's our first chance to be a buyer. Then, of course, the moving average comes around, market runs higher on strength, and then we get one more opportunity, which will be the pullback down around the low of that range. Remember, you want to buy the low of that range. So two opportunities. One is going to be a seller failure. Seller failure leads to strength. That strength brings the moving average up, and the moving average now acts as support, right? You might also find there to be a support trend line coming off of that low as well to protect the position against any final sellers. Now that's the first, right? That's the first option. Okay, so now as we back this up, right? Now we go back to retest the high now, right? Go back to retest the high. If we pull back, we do it again, right? Do it again. Okay, so plan stays the same if we pull back off that high. But if we go through that high, right? Go through that high now. Let's bring this moving average up. Oh, that's not a very good job there, Joe. There we go. And now I want to see strength. Okay, this is the most important factor in a what I call a fake out, breakout, pullback. We've got to see a real strong move through that high. Okay, I'm not talking about this, right? I'm not talking about this. Okay, it can be a strong move up to the high, but we got to see it go through the high. Go through the high, right? I have to see it go through the high. So, Joe, what does a strong move look like? I couldn't tell you, but what I know is that if the moving average can get above the top of that range, it's strong enough. Okay, that's an easy way, black and white rule to follow for a breakout to the highs. Because what happens a lot of times is we'll see a strong move higher, but it barely moves outside the range. It pulls back. The buyers try to buy it, and what happens? It collapses back down again. Okay, don't make that rookie mistake that I made numerous times early in my career. What I want to see the sucker jump, not back to the high, but through the high. Then here's the important part. I want to see what I call a two-legged pullback, and I like to get it just below the moving average. This is a great little trick, because what happens is when the buyers try to buy that first pullback, right, and it rolls over, the sellers now start thinking, let's sell this back into the range. So they jump in short. The problem, though, is now we know where their stops are, right? The stops, if they're wrong, all their stops are here, right, or here. And it basically allows us now, it's a big bullseye, right? Those stop losses are just asking to get run now. Remember, this is a bullish market, right? Stops are just begging now to get run, right? And if we can run higher here, we start buying off of that move going higher now. Now all those sellers are sitting ducks, and we have a strong move through. Make sure I buy above that top, right? Above the top of that range, get that moving average up above, right? And then again, two-legged pullback, because that two-legged pullback will confuse the sellers into thinking this market's going back into that range. We hold the top of that range, buy up that breakout pullback, right? And now we've got gasoline being poured on the fire because the buyers are buying, and now the sellers are sitting ducks, just a boom, boom, right? Run those stops up to new highs, and then look for, right, a measured move, right, for your final big target overhead. Okay, so that's, again, I want to go over this real quickly here because this is the basic principle of almost everything you can see here, right, in tonight's session. So now here we are, right, here now on oil. And again, I know I'm covering a lot here, so don't forget to drop me questions in the comment section. And also don't forget, I teach a lot of this stuff inside my free trial as well. And of course, as a client, you'll learn all of it. Now, with that said, here's oil, right? We're bullish, right? We get a triangle pattern, right? It's basically one big range. We go up, we pull back, we go up. Do the buyers explode higher? No, they can't hold it. We don't keep going higher, right? So in all reality, this is the range right there, right? That's your move up. There's your range. You kind of see how it's bouncing around there. Everything else is just a variation of it, right? There's your trend line coming off the lows, trend line there off the highs, right? You can see it's a triangle, but it's a range, right? It's a range. So now knowing that, we want to buy down on these lows, and we're going to be very careful up here at these highs not to get too aggressive, right? Not to get too aggressive. So let's put this on. Let's put this range on right there. I wanted to keep the range off of there so it wasn't confusing for you, right? But there's kind of the range right there, right? So now we obviously know I want to go one try, two try, failure back up, right? So again, if you need more help on that, go back and watch the beginning, right? Two try rule, you know my reasons why, right? I won't go over that again right now. But again, two try rule, below that range, get those sellers roped in so we can buy back up. The hard part's going to be stay away from the middle, right? Stay away from the middle. The middle will always be the most difficult because you've got sellers selling off the high, you've got buyers buying off the low, and it creates this little kind of vacuum in there where it's very difficult to get support and resistance levels to hold in the middle of that range. The hard part's going to be getting that strong breakout higher because as you can see, I've got some measured move levels overhead. So in order for me to feel confident with this, I'm going to have to get a real strong move up above that 64.12 area. And that shouldn't be difficult for oil, right? But it's definitely a must. I've got to see a strong move up. I've got to get that moving average up, right? And then, of course, two-legged pullback, failure, and then up we go from there. Okay, now, another thing on this particular chart is if we see that strong move higher here, right, don't forget about a hidden channel. Draw up that high, bring up off that low, get that moving average, sorry for same colors there, right? Moving average here, right? And then use that low of that channel. You know, again, you don't want to buy high, but you do need to see the market show me proof that we are going to a new higher high, right? You got to show me proof that you want to buy high because from what I can see right now, every time we go higher here right now, the buyers are getting clobbered. I want to see it go low to be a buyer up or up so I can buy it low, right? That's the key right now. Last but not least, how do we turn bearish? Strength, pullback, strength, right? I don't care if we're selling, and tomorrow could easily be a trend reversal because who the heck knows what we're going to see from non-farm Fridays. So like I said, I'm doing my best right now to anticipate this, but again, tomorrow morning, we may have to redo this entire chart because the market may come out at 8:30 and go all over the place, right? It's just impossible to know. So again, strong move down, pull back to the moving average, strong move through. Remember, if that second leg fails, we're going back up into that range, right? So strong move through, mark up those lows, mark up that high, much easier, right? And sell off of that level of resistance. Where are we going from there? Back to 62. 62, of course, being the beginning, right, of that move from yesterday's session. So pretty easy scenario there on the crude. The big variable right now is A, what does the news look like tomorrow morning? And B, if we do go higher, can we really punch through that high, right? And be careful trying to sell at that high because, again, it's a bull market right now. So, of course, buying is definitely, right, on my list for tomorrow. How about some S&P now? Over to the E-minis. Now you'll notice again, it's a variation, right, of that same pattern again, right? Let me zoom out a little bit more here. So S&P is bullish with a spike in range. Maybe, possibly a spike in channel pattern as we head into non-farm Friday. The bulls definitely have control. This is not a bear market. But it's easy to see that buyers keep getting rejected every time they try to push new highs. Knowing this, my focus is definitely on buying low, buying at support, down at session lows. And my goal is to use seller failures as the market dips lower with a target obviously going back up, to retest that range high and you get that prior week high overhead. So this is the first time now we're starting to see those prior week levels. That's definitely going to be a big magnet waiting there overhead. Now the problem is we want to try to get in nice and low down here so we can get a nice big run for a big juicy target up to that prior week high, right? I don't want to buy up here. We're already there, right? I want to buy down here so we get that nice big run back up to retest the high. Remember, half the battle of being a trader is determining what the direction is. In this case, we're bullish. That means we want to buy at support. So half the battle is looking for an area of support where I can get the biggest bang for the buck, right? Where can I buy at support so I can take a 1% risk for a 10% reward? That's the magic sauce. That's right. That is where the biggest profit gains in our account come from, right? Not buying high into resistance, right? Staying patient to buy low at support. And you better believe it, sometimes we wait all morning long and we never get the pattern. Welcome to business. Welcome to life. Sometimes we do everything right and we don't get the pattern we want. So we wait for the following day. The good news is you use the right trading strategy, you can watch multiple markets, and there's always something good happening, right, every day. Okay, so now here on the S&P, pretty easy here, right? Strong move up. And you can see right away here, right, it was pretty much like a triangle right there, you know. It was a range, right? It was a range. So, of course, what happens? We go back to the high, right? We go back to the high. Do the buyers blow through the highs? No, they don't, do they, right? They collapse back down in, right? One try, failure. That right away, once you see that failure right there, now you know, right? Look left, find those swings, and surely, right? Surely nobody picked up on that. There's that trap low at the low. I'm not making this stuff up, guys. You can see examples of this over and over again on any liquid market. That's the key, liquid markets, right? Buyers and sellers are all participating at the same time. So, got that range. Buyers come in, they buy everything they get their hands on that little dip low, right? Beautiful example. Well, surely now they go back up. Surely they're going to blow this thing out of the water now. No, right? What happened here? So obviously you can see the buyers are what we call rejecting these highs, right? The buyers, every time they go back to the high, they're getting rejected. Now, this does not mean the market's bearish. It just means the buyers need to get a better price. You know, this is almost like, you know, you drive by the BMW dealership and they've got the sticker on the windshield for $60,000 and nobody's buying it, right? But then all of a sudden they say, we'll take $15,000 off, right? Now $45,000 this week only. And they sell all the cars, right? You know what I mean? That's all it is, right? The BMW dealership has to lower prices to attract more buyers. That's what we need right now, right? Trust me, right? If they were selling those cars at 60 grand a pop, right, they wouldn't be in the lot. They'd be gone, right? If the buyers wanted this market going higher, it would be higher. The price is the truth. It's one of the reasons why I love trading, right? You turn off the television set, you put in the newspaper and look at the chart. The chart tells you the truth. It always tells you the truth because nobody lies when they put their money on the line, right? They speak the truth. And the price is the truth. It's the collection of everyone's opinions, diverse, right, unique opinions, all gathered in one great location. It's a beautiful thing, these financial markets. So we got proof here right now. The buyers, yeah, they're there, right? They're buying low, but they're having a hard time getting to the highs. So knowing that now, there's your range. Again, I've got this thing as a bit of a channel here as well, which we'll talk about in a moment as well, right? But that is basically a range-bound market. So I want to get it down, 1 try, 2 try, and back up, right? I want to buy down around these lows, right? Remember, if we go higher here, right, make sure we get that, right? A strong move up, really strong. How strong? Strong enough to get above those highs, right? Then we can buy that pullback from there. Remember, you want to see a lot of strength going higher, right? It needs to be obvious that the opinion of value has shifted higher, right? Not just poke its head out and come back in, like we saw it twice already, right? Now, I'm also curious here about this spiking channel, right? Because we may get a chance to use that tomorrow. I want to come down here and buy down here because that's where the magic happens, right? Make that move lower, 2-try rule into a failure to pull back, right? Pull back to retest the high, right? That would be ideal for tomorrow. But you know what? I will be definitely open-minded here if we do go back up, if we hit the top of that spiking channel and then pull back here, right? I will definitely look for that same pattern here again, right? And we'll see if we get any response from those buyers down there. We may not, right? We may not. We may something like this, right? It may jump up, right, and then collapse back down again, and we'll know exactly what's going on. But if we see it go up and then pull back, right, moving average comes over. You see those bears try. Again, you can use that support. Oh, sorry about that. You can use that support level here now, right? Use it as support, and you can look for that buy, failure, strength, pull back, right, and go. Okay, so that's a great plan of attack, right, for tomorrow as well. But again, if you're going to buy high, you better be darn certain this thing is exploding going higher, right? So if we do go higher, right, higher up, pull back, and go from there, right? Or, right, big blast higher because non-farm Friday, right, and of course, we're off the races, right, on a new, right, kind of hidden bull channel there, like I mentioned on oil, right? Draw off that high, bring it up off that low, find the level of support right there. All right. Now, last but not least, how do we turn bearish? Yeah, strength, pull back, strength. I don't care if we're so going short tomorrow. It doesn't matter to me. Right. Find that new low. Right. Find those new lows. Wait for the market to turn direction because, again, strong move down. Right. Look at how strong that move was. That was a real strong move down. Right. Nice strong move down. Look what happened. They tried to sell it. Failure, pull back. Same pattern. Right. Same pattern over and over and over again. So remember, if we do go lower, make sure you hold that pullback to the moving average. Come on, Joe. Right? And then, right, jump down from there. Once you jump down from there, line those two suckers up at the highs. What I'll do is I'll grab that as a resistance level right there, right? And then that causes like this little kind of envelope of resistance there, and you'll sell up in that level of resistance. All right. Now, there's a big potential here. This market collapse. If we get a really disappointing number tomorrow, look at how big, right? Remember this move from yesterday? I don't want to say we go back to 2560 tomorrow, but it's possible. I mean, anything's possible on non-farm Friday. If this number comes out tomorrow, dreary, right? And then all of a sudden something else hits the headlines, right? We could be beat up here for the bulls, and this could be a pretty aggressive move lower here, right, as buyers liquidate positions. It would probably take more, though, than just a non-farm payroll number that's disappointing tomorrow. It would probably take another headline, something else to come in and pile on top of that bad news, right, tomorrow morning. It's not probable, but it's definitely possible. Let's keep going. Good plan there on the S&P. Same thing now on the Nasdaq. I'm going to sound a bit like a broken record now, guys, so I apologize. The Nasdaq is bullish, spike and range pattern, and that tells me the most reliable buying opportunities will be using seller failures down below the low of the range tomorrow morning. So again, very similar, right? Strong move up, we pull back, we try to retest that high, and what happens? Nope, no retest there, and we run lower. Once you see these buyers, right? Once those buyers struggle to get through those highs, you already know where you want to be a buyer, right? You want to buy down below that low. Oh, and what a coincidence. I seem to be getting lucky here today. These are great examples. No, it's no coincidence. It happens every day. Every single day we see these patterns, right? Strong move down, back to the moving average. Oh, surprise! Bears fail, right back up, right into that range again. That's your pattern, right? That's your pattern. Again, strong move up, pull back, can't go through the highs, pulls back. You know where you're looking. And this applies to futures, stocks, ETFs, anything that's liquid. Anything liquid. So no cryptocurrencies, no penny stocks. I'm talking real markets, right? Real markets where the big boys and girls work. Okay? So we've got that failure, right? And that failure now leads to strength, right? And of course, strength is to pull back. The problem is they got that falling resistance here. So that pullback pattern gets stuffed before we can even try. So now here we are. Right? I've got a little channel going on here. It's not that big of a deal, though, to be honest with you. All I care about is let's get down, to try failure, back up in, right? Again, same plan I talked about at the beginning. Nothing changes here. Or strong move up. Now, this is where it gets exciting for the Nasdaq because you don't have to stretch your imagination too far. Where is it? Where is it? Where is it? Okay, there it is. 68.9. That's the prior week high. Okay, I don't want to, it's a little bit far-fetched right now, but I'm telling you, a little bit of good news tomorrow, a little bit of headlines, right? All of a sudden, Facebook clears up whatever their issues are, and good jobs number, and bam, we could be running right up above that 600-700 big round number. We could be running tomorrow. Again, who knows, right? I mean, who knows? Tomorrow's a complete gamble. Sorry, not gamble, but a complete question mark. It all comes down to how much volume do we get, right? Do folks even show up? Because again, like I said earlier, right, experienced traders, the majority of them will trade very lightly on Friday because it's non-farm Friday, right? They'll save their bullets for the Monday, which I call reaction Monday, right? The following Monday, which is always, in my experience, always a better day to trade. So bottom line is, 1 try, 2 try. Remember, don't be scared of a lower low, 2 try, failure, strength, pull back up in, right? Just like I talked about earlier on in the session. Or, right, we see it jump up, right? That jump up, what do we need? We got to get that moving average up, right? Up above where? Up above that range high. Okay, use it as support now. And then, again, what I'll do is I'll connect these highs up to these lows, right, and try to use that now as a level of support. A little hidden channel, if you will. All right, guys? So relatively easy. But again, the hard part is to stay patient and let it show you the confirmation. I'll tell you right now, watching a market explode higher is very difficult. I don't care who you are, how long you've been trading. It takes every ounce of restraint, right? Use duct tapes, handcuffs, shock collars. I don't care what it takes, but keep your fingers off the buttons up there. Okay? I realize if you're coming to futures from other illiquid markets, buying breakouts may work on illiquid markets, but they don't work on liquid markets. Okay, so be very careful with this. Okay, so don't buy that high. There's a whole lot more money to be made when you buy that pullback, right? Because now you're buying at support. That simple rule of buying at support rather than buying at resistance. Now, last but not least, how do we reverse? We definitely could reverse. Easily could, especially with big news tomorrow, right? So strong move down, pull back to the moving average, right? And then, of course, strong move through. And you're right, right? I'm not going to sell this. You're right. It feels like you're missing a big chunk of this move. But here's what I always bargain, right? I will trade you profit for probability any day of the week, right? This right here, this is a 40% trade, right? That's a 40% trade. Now, obviously, do your own due diligence, right? I'm not a licensed advisor, right? So, it could be less, it could be more, right? But it's not as high probability as you're worth it, right? You work too hard for that money, right? Don't put it to risk during low probability trades, okay? Then draw that channel down, right? Find that new channel. Now there's evidence the bears have taken it now, right? This, and again, don't quote me on this, but this is a 75% trade, right? To be honest with you, I think it's even more than that, right? It's a great pattern, okay? But again, right? It takes the big boys and girls. They've learned not to go wasting their ammunition on that trade. Right? What they do is they're waiting for the reversal, right? They're waiting for the failure. Okay? The experienced traders with that calm, keen, right? That calm, even keel to them, right? They wait for that lower low, right? They wait for that lower move. Yeah, I know. There's less profit to make. I understand, right? But I would trade you any day of the week. I would trade you a much higher winning percentage. I'll give you a little bit more of my profit if you give me a much higher winning percentage any day of the week because I can always trade a bigger position. Make sense? Right? You can always add one more contract. You can always add another share. You can always add one more lot. Okay? Increase the probabilities, right? And you're free. You have discipline, that disciplined mindset to wait for the high probability trades. Remember, trading is a game that anybody can win as long as you understand probabilities. The problem is our brain does not do a very good job at quickly calculating probabilities. If you want a great book recommendation, then I'll keep moving here. It's a book by the name of a guy by the name of Daniel Kahneman. It's called Thinking Fast and Slow. I would also recommend a book called Nudge. These are two introductory books into the fantastic and fascinating world of ultimately the newest form of psychology, which is called behavioral psychology or behavioral finance. Okay, so behavioral psychology, right? How human beings make systematic poor decisions when there's money on the line or when things move quickly. Right? I think you'll love both of those books. You can find them on Amazon. I've got no financial interest in that, obviously. I just want you to see why I say it takes a disciplined mind not to take that trade short. A disciplined mind. I didn't say smart mind, just discipline. That's a lot of what trading is, right? You've got to be disciplined not to let your emotions say, we're going lower, sell, because your brain hasn't caught up to it yet. Your brain says, oh, I've seen a reversal before. But your brain should say, I've seen a reversal before, but they're not reliable, right? See, that's the second step that most people's brains haven't been conditioned to think. Again, we're really smart creatures, but our brains, they have a hard time with very fast calculations of probability, right? We can steer through traffic. We can navigate through rush hour traffic easily, right? But once we have to make that next level thinking, read the book. Read the book. You'll get all good stuff from there. All right? And if you want any other book recommendations, drop me a comment below the video. Right? I got a bunch of great books I would love to recommend to you, right? That may not be trading related, but are mindset related that I think you guys will enjoy. So drop those comments below the video on YouTube or shoot me an email. I'm always available. So good stuff there on the Nasdaq. Got a big potential move there. 68.50. I don't know. Bit of a pipe dream there tomorrow, right? But we'll see what we get out of the NQ tomorrow morning. All right, let's keep going. I'm a little bit long-winded here, a little bit long in the tooth, as they say. Let's keep going here because I want to get you guys out of here at a decent time tonight. How about some gold? The yellow metal is bearish with a big old spike in range pattern, maybe a spike in channel pattern this evening as well. And that tells me to focus on buyer failures for selling opportunities up at range highs tomorrow morning. Now, a word of caution here, guys. Gold is by far the most treacherous market when it comes to non-farm payroll Friday. And like I mentioned earlier, over the past few months, remember this only happens once a month, right? First Friday of the month. Over the past few months, we've seen really good trading on gold right before the number came out. So I hope for you guys in London, right, and obviously in Asia, but in London most importantly, hopefully we'll get some good price action overnight for you guys, but don't be surprised if it's pretty slow, right? It could be relatively slow in the gold market here overnight. And then honestly, if there's one market tomorrow that you want to have a really short leash on, it's this guy or gal, right? It's gold. Because remember, the non-farm payroll numbers will be directly applied to the strength of the dollar. The strength of the dollar, of course, will have a negative correlation, right, to the gold. I don't want to get too technical on this, but just be careful on gold. It oftentimes is very slippery before and just almost untradeable afterwards. Okay, this is again why it's good to have a strategy that works on anything liquid because you can just dump gold and then go grab something else that's moving easier, right? So gold may be a sloppy, challenging session tomorrow. It may be the volatility tomorrow may be a little bit too much to really handle. Right? You may have to use a bit of a wider stop. If you do have to use a wider stop tomorrow, remember, when the volatility increases, right, it's risk first, then reward second. So as the volatility tools, which I use ATR, you can use any volatility tool you want, right? But if the volatility is too big on gold tomorrow, widen that stop out and trade a smaller position size. That will keep your risk profile in balance. We'll talk more about that tomorrow morning in the trade room. So spike and range pattern going lower. Boy, I'm running way late on time here, but I got a lot of good things to share with you guys today. Right? We see the market go lower. Right? Strong move down. And by the way, wasn't this just a gorgeous hidden channel we talked about last night? Wasn't this just, I mean, this is a gimme, right? Strong move down. Yeah, draw off that high. Bingo. Right off that high, right? Like I said, you can't make this stuff up, right? So that was the stuff we talked about last night, right? Beautiful, beautiful, beautiful. In fact, just after, right, we opened up our trade room, right, this morning. So all the early birds, right, got a nice easy worm this morning on the gold, and hopefully you were locked and loaded for it from last night's newsletter. So bottom line is, guys, strong move down. Now that strong move down, right, that strong move down says what? What does a strong move in one direction tell you? We talked about this last night, right? Two-legged pullback and a retest of the low. Okay? Bingo. They get back to the low. Now, you tell me, do we explode lower? Right? Do we explode lower? No, we don't. What happens? We reject off the low. Right? Now, once we reject off that low, you can draw these two trend lines in here now, right? Up to that high, and sure enough, it finds resistance. Do you see how this channel can be created? Right? Lower low, bounces, right? You already know now, right? You already know now you're looking up around these highs for the sell, right? You already know that range, which of course you shave off that high, right, for the range high right there. You already know once you see that bounce, you already know. Look left, find that prior swing, and look for a sell up there, right? So you already know the location of it, but then you can see how the market creates a little channel there, right? And you draw off that high, and that's where, right, so you get to the top of that channel. So that's what they used. On a faster time frame, they came back, bounced, failure, and back down, and it was a beautiful set of price action on gold. But the problem is now we go back to the low, what happens? Rejection again. So we're obviously bearish. The sellers are clearly interested in selling high here, but they are definitely not too keen on selling low. So we know we're seeing rejection at that low. What's the plan here now? The plan is get up. Right? Get it up, get price going higher here, right? Let those buyers try to buy the pullback. We know where their stops are. We look for the failure. That failure leads to strength. That brings the moving average down. It may chance to sell up around those highs, right? That will be your most reliable pattern right there. Okay? Again, two basic patterns, right? Failure into strength. Failure into strength, right? Relatively easy there. Okay? Now remember, right? If it goes up, strong move up, moving average comes over, pull back to the moving average, we explode higher now, we're no longer a bear market. So drop that high, find that channel, right, and buy the pullback. Okay, and if that happens, watch out. Watch out, because we have a big potential retest of that high at 1352.5. Probably not going to happen tomorrow, but hey, maybe early next week, right, if the market turns bullish. So keep an eye on that as well. The challenge here I have is the market going lower. This is a concern. There's that prior week low, right? The prior week low. We talked about those weekly levels, right? So this is a concern. We got a possible measured move down here as well at 23.3. And we have the low of this channel here too. So I'm definitely concerned about the break lower. I'm going to have to see basically, I'm going to have to see a strength, pullback, and strength going lower here. I'm going to have to, it's going to have to be very, very clear that these sellers have no intention on sticking around the prior week low, and they have no intention on respecting the measured move or that channel low. So it's going to be, it's tough to be a seller down here. I'm honestly thinking because of all these levels of support, I'm looking for that one try, two try. I'll try to buy it. I'll try to buy this going back into the range, right? Just because we have all those levels of support. Now, obviously, going against the trend, I'll use a smaller position size. So if I'm going 4 contracts short off the highs, I'll go 1 or 2 contracts long off the lows. Does that make sense? Right? So the hard part's going to be, though, is if we do go lower, right, don't be surprised if we see a real strong move down, but then we get stuck, right? We get stuck, and then we get that strong move up, right, and the buy back up. I'm going to look for that buy, right, if we start to see that market stuck in the mud. Okay, now again, if we do see it go lower here on strength, pullback, strength, I mean, if this thing really starts cooking to the downside, right, I'm fine by that. I can use that level of resistance now as, that level of support now as resistance, but again, I've got to, it's going to be really strong, right? It's going to be very obvious that they have no regard, right? What measured move? What prior week low, right? That's what it needs to feel like. And that will probably happen because of that news tomorrow. All right, so get to it early tomorrow. Get out of there early tomorrow on the gold. Again, don't be surprised if gold is almost untradeable. But again, up, one try, two try, failure, strength, pull back and back in. Or maybe one try, two try, explosion higher, right, hidden channel, and we're off the race to the upside tomorrow. It's a little bit tough to tell right now because of that big news report, right, tomorrow morning. And then last but not least, finally a channel we can actually work with, right? What a beautiful qualified channel, right? Did you watch last night's newsletter? If you didn't watch last night's newsletter, I'll put a link back up here at the top of this chart here right now, right? Grab last night's newsletter because we talked about those 4 different types of channels in last night's newsletter, and this is exactly what we talked about, right? This is a qualified channel, right? It's like Red Riding Hood, right? Not too soft, not too hard. It's a perfect fit, right? So we got that nice wide channel, right? Not too tight, not too narrow. It's a 45 degree. It's actually more than 45 degrees, which means it's a very good, strong enough trend, right? And you'll notice we have 1, 2, 3, 4, 5, 6, 7 tests of that channel, right? Anything more than 4, and we're cooking with gas now, guys. We've got a qualified channel. Now, what does a qualified channel tell me to do? Well, a qualified channel says you can trust the top of this channel. So, for example, up at the top of that channel, we're above the moving average, right? Moving average comes over, buyers try to buy it, they fail, right? And back down right there. Now, that obviously isn't going to be that big of a trade because the measured move is sitting right there as support. So it's a quick scalp. Now, this is a great example. We talked about this earlier, right? The most important aspect of trading is figure out who has control, bears do. Find a level of resistance. This is important. Find a level of resistance where sellers, in this case, because it's the bear market, where sellers can participate with a small amount of risk and a big amount of reward. Okay, so in other words, right, if I take a trade off the high of this channel right now, yeah, you know, it's going to be decent risk reward, but it would look a whole lot better if it went like this. Right? This would be a whole lot better, wouldn't it? Because now, if I can sell up here above the high of that channel, and that's the beautiful part about a qualified channel, is that oftentimes, because the sellers have sold every time they hit the high of that channel, a lot of times it takes a little bit higher price to attract those sellers into the market, right? Sweeten the deal for me, right? Price goes up, then they sell, okay? So when we get the market going higher here now, watch for something like this. Draw that trend line up. Now let's do a different color here. Let's draw it like that, right? We call this two-legged pullback. Watch that trend line, get below it, test it. Moving average comes over. Buyers try to buy the pullback. Obviously, buyers on the wrong side of the market. They might be successful, though. We'll talk about that in a moment, right? They fail into a pullback, and back down we go, right? There are 3 opportunities here. The aggressive one, right? People who like the wooden roller coasters, you know, carnival rides, you know, skydiving. If you like a bit of risk in your life, right? That first one will be good fit for you. Okay. Now remember, right? There's that balance between, right? There's that balance between probabilities, right, and profitability, right? Okay. Remember, the higher the probability. Negative correlation, right? The higher the probability, the less the profit, right? The less the probability, the higher the profit. So remember that negative correlation, right? So look back at this now. If I take this one, right, this is probably a 60% trade, but tons of profitability, right? All that space below us, right? This one now turns into a 70% trade, right? A little bit less profit, much more reliable, right? And then of course you got the last one, right? This is your 75, 80% trade. Again, please do not quote Wynn's numbers. This all has to do with market context, how it feels at that time, right? We go over a lot of this, right? So make sure just be aware, right? Protect your capital, manage your risk, right? And these numbers, right, will be guidelines, right? Basic guidelines. I want to illustrate to you though that the greater the profit potential, right, the lower the winning probabilities on it. That's why reversals, which look so enticing for big profits, they have very small probabilities, right? Think about it, right? A trend reversal has a huge possible profit, right? But a very low probability. As the market reverses that direction now, and the market becomes a new trend, new direction, the probability goes higher, but you've missed a lot of that profit. Hope that makes sense. Need more clarity on this? Is this ringing bells right now? Right? If you're getting a light bulb moment, give me a heads up in the comments section. I'd love to know this stuff is making sense to you guys. So those are three patterns you can use on the way back down to that low. All right? So the higher we get, the better. So I want to see us up, right? Up, failure, strength, pullback, back down to retest that low. Okay? Now, sometimes, right? Sometimes we get this. Trend line comes up, explosive move higher, moving average comes over, the buyers take it and they run. Right? Bull market now. Again, this is not done to scale, right? Just illustrating right now. New higher high, up, right, by that pullback. The reality is oftentimes if you draw this trend line, a lot of times what happens is price, when it reverses, it jumps, right? It runs. We're not going to pull back all the way to that trend line, right? You're more than welcome to wait for it, but you'll be waiting a long time. Most of the time what happens is when the market jumps like this, right? It jumps so strong because it's a reversal. And what happens is the bears get out, right? Everyone's buying now, not buying, but there's sellers covering their short positions. And of course, the only real trend line you get to use is this one right here. That's why I draw it like that, right? That's why I don't recommend waiting for that pullback. Obviously, this whole area is a support area, right? But usually though, all you get is that little pullback to that trend line. And then obviously back to retest that high is where the try going to go, right? But if the buyers take control though, there's that prior week low. So the buyers do take control. Don't be surprised here if we go up into a trading range and possibly early tomorrow morning, we're bullish with a trading range, one try, two try, right? Buy the low of that range, kind of stuck around that prior week low. And of course the target, ultimate target, is up to retest that high. All right, guys, what if price is going lower, right? What if we keep grinding lower here, right? So what if we come up, we fail, back down, we get back down to that low, keep doing it, right? Keep doing it. Sell off that high, up above the high, right? If price keeps going lower, keep keeping on, right? Keep up a strategy. Just because the price goes lower does not give you the reason now to throw away your strategy, right? And start making foolish decisions. So if price does go lower here, it confirms our direction, wait to sell up at resistance. All right, guys? Remember what I said earlier, be careful. Be careful tomorrow. All right, I've done my best to hopefully throw as much cold water on this tonight as possible, but be careful for tomorrow because again, it's the biggest news report we get of the month. Okay, save those bullets for Reaction Monday, and don't forget, if you like this newsletter, if you're learning stuff new every night in this newsletter, what are you waiting for? Grab that free trial. I'll teach you more about all my strategies, all my patterns, all the strength, the pullbacks, the failures, the traps. I'll teach you all about that stuff inside that free trial. I think I have the best free trial in the business. And then don't forget, we got beginner, intermediate, advanced membership. I continue to talk to people every day who are brand new to futures. If you want to know why I love futures so much, grab the free trial, join as a beginner. It's the best investment you'll ever make in your trading career is knowledge, right? Knowledge is power when it comes to controlling your own destiny. And don't forget, I'm always here. You can always pick up the phone and call me in the office. I promise I will answer the phone. I'm not a robot. I know a lot of websites these days have robots doing everything for them these days, but I don't really buy into that. I think the most important thing is human interaction because that's what produces the best results, right? Don't believe me? Call the office, pick up the phone, and we'll talk more about your trading strategy. I'm also here on live support. That rings to my cell phone, so don't be afraid. Morning, noon, and night, I'll be there to answer your questions as well. Hope you guys loved tonight's newsletter. Hope to see you guys tomorrow in the trade room. And holy Christmas, it's already an hour into this video. What are you still doing here listening right now? Let's get out of here. Be well out there. Be nice to each other, will ya? And be here tomorrow. Adios, amigos. Bye-bye.